You sell digital products, courses, templates, ebooks, Lightroom presets, Notion dashboards, and you've never once thought about sales tax. I get it, most people don't, but here's what you need to know. States are catching up to the digital economy fast, and rules around taxing digital products are nothing like what most sellers expect. I'm Kiara, I'm an enrolled agent, federally authorized to represent taxpayers before the IRS. I specialize in sales tax compliance and work with online sellers and digital creators on exactly this issue. By the end of this video, you'll know what states tax digital products, why the rules are different depending on what you sell, and what you should actually be doing about it. Let's kill the biggest myth first. A lot of sellers assume that because their product is digital, because there's nothing physical being shipped, sales tax does not apply. That assumption made sense 20 years ago. It does not hold up to today. Sales tax was originally designed around tangible personal property, physical goods you could touch and hold. Digital products didn't exist in a meaningful commercial sense, so most state tax codes simply didn't address them. Then the internet happened. Digital products became a massive industry. States started losing revenue because of all this economic activity was flowing through digital channels that their tax codes were not capturing. So states started updating their laws. Today, over half the states in the country have enacted legislation that specifically addresses the taxability of digital products, and the definitions vary wildly from state to state, which is exactly what makes this so complicated. So the starting assumption for any digital seller should not be, this is tax exempt. The starting assumption should be, I need to check. Before we get into which states tax these things, let's make sure we're clear on what we're actually talking about. Digital products for sales tax purposes generally fall into a few categories. First, digital goods. This includes things like ebooks, PDF guides, downloadable templates, stock photos, presets, fonts, and digital art. Anything someone can download and keep. Second, digital services. This is software as a service, SaaS, as well as streaming services, subscription platforms, and cloud-based tools. This category has its own layer of complexity that we won't fully get into today, but just know that it exists. Third, digital content. Online courses, video content, audio content, webinars. This is the big one for the creator economy, and it's the category with most inconsistent treatment across states. Where it gets tricky is that some states tax downloaded content differently than streamed content. Some states tax courses but not ebooks. Some states have a blanket exemption for educational content and some don't. There's no national standard, and that's why sellers get caught off guard. Let me walk you through the landscape. The states most aggressive about taxing digital products include Washington, which has some of the broadest digital tax rules in the country and captures almost everything, including software, digital content, and downloads. If you sell anything digital and you have customers in Washington, you need to be paying attention. New York taxes a wide range of digital products, books, music downloads, online courses. New York has been expanding its digital tax rules consistently over the past several years. Texas taxes certain digital products, including online courses and digital subscriptions. Texas is also known for aggressive enforcement, so this isn't theoretical. Pennsylvania taxes digital downloads broadly. They were actually one of the earliest states to address digital products, and their rules have expanded over time. Minnesota, Wisconsin, and Arizona all have digital tax rules that capture online courses and downloadable content under certain conditions. The common thread across all of these states is that once you cross their economic nexus threshold, usually 100K in sales or 200 transactions, you're required to collect and remit sales tax on applicable digital products sold to customers in that state. Not just physical products, digital ones too. Now for the good news. Sort of. Several states do not currently tax digital products or have explicit exemptions for certain types of digital content. Florida, California, and Virginia are examples of these states where digital products have generally not been subject to sales tax. But here's the thing about state law that every seller needs to understand. It changes. States update their statutes, they issue new guidance, and they change their positions on taxability regularly. A state that doesn't tax digital products today can pass legislation next year that does. California in particular is one that tax professionals watch closely because it's such a large economy. If California ever enacts a broad digital product sales tax, the impact on online sales would be enormous. So even if you look up a state and it appears your product is exempt, document it. Keep records of when you checked and what the guidance said. And check again periodically because what was true last year may not be true today. Now, here's a wrinkle that actually helps sub-sellers but confuses almost everyone. A marketplace facilitator is a platform that processes transactions on behalf of sellers. So think Etsy, Amazon, Gumroad, and Teachable. Most of these platforms operate in states that have marketplace facilitator laws, which means the platform itself is responsible for collecting and remitting sales tax on behalf of the sellers using it, not the individual seller. So if you sell your digital product exclusively through Etsy or a similar platform, there's a good chance the platform is already handling sales tax collection for you in states where it applies. But This is important. If you also sell through your own website or a tool like StanStore that doesn't operate as a marketplace facilitator, you are personally responsible for collecting and remitting sales tax in states where you have Nexus and where your products are taxable. This is the gap that gets sellers. They assume because Etsy is handling everywhere, they're covered everywhere, but they're not. Okay, so let's make this actionable. Step 1, figure out exactly what you're selling and how to classify it. Is it a downloadable file, a stream course, a subscription, a service? The classification affects how the states treat it. Step 2, pull your sales data by state. What are your top states by revenue and transaction volume? Focus on your research for those states first. Start with the ones I mentioned: Washington, New York, Texas, Pennsylvania. Step 3, look up the taxability of your specific product in those states. This is where it gets granular. A quick search for state name digital product sales tax will usually get you into the state's Department of Revenue guidance. Read it carefully or hire someone to read it for you. Step 4, if you're selling through platforms, verify what those platforms are and aren't collecting on your behalf. Most marketplace facilitators publish information about which states they collect for. Check it out and know the gap. Step 5, if you're selling through your own website and you've crossed the threshold in states that tax digital products, register and start collecting. Continuing to not collect is not a strategy, it is a debt accumulation. Step 6, if you've been selling for a while and you haven't been collecting where you should have been, don't panic. That's what voluntary disclosure agreements are for. A VDA lets you come forward proactively, limit your look-back period, and often reduce penalties significantly. It's almost always better than waiting for the state to find you. I want to spend a minute on this because I know some of you are watching this thinking about past sales. A voluntary disclosure agreement is a formal process where you approach a state proactively and say, here's what I owe, I want to get compliant. In exchange, most states offer reduced look-back periods, usually 3 years, instead of the full statute of limitations, and reduce or waive penalties. The Multi-Tax Commission runs a program called the National Nexus Program that lets sellers pursue VDAs in multiple states simultaneously. It's designed specifically for sellers who need to get compliant across multiple states at once. This is an area where working with a sales tax professional pays for itself. The process has nuances, and doing it wrong can actually make things worse. But doing nothing is always the more expensive option in the long run. Here's what you take away. Digital products are not automatically exempt from sales tax. Over half the states have rules that capture digital goods and content. Marketplace facilitators help, but they do not cover every single channel. If you've crossed economic nexus thresholds in states that tax your product type, you need to be registered and collecting. And if you're behind, voluntary disclosure is the path forward. 2 things in the description box for you. First, grab the free download 5 states that will come after you first, so you know exactly where your highest risk is right now. Second, if you want the full 50-state breakdown with thresholds and enforcement details, my sales tax nexus cheat sheet by state covers everything, and the link is below. And if you're a digital seller who needs to figure out exactly where you stand, my consultation link is there as well. This is fixable, and it's better to deal with it now than later. Subscribe if you want more content like this. I drop a new video every week.